Hi, and welcome to the HMBC podcast. This week we will discuss what a balance transfer means. A credit card issuer's primary source of profit is by charging interest on cardholders' balances. Let's take Capital One for example. In 2019, Capital One earned a whopping $18.3 billion in interest payments. That accounts for 80% of Capital One's credit card earnings. So, credit card issuers have a lot of money on the table to be made by taking over your balances from a different credit card issuer. So, banks want you to owe your debt to them instead of anyone else. Therefore, banks will offer to pay your credit card debt for you, and you should from now on owe them the money plus interest instead of the previous credit card issuer. This process is called a balance transfer. It works as follows. You can call, for example, Capital One and ask them to pay up your Bank of America credit card debt. Capital One will ask you for your Bank of America credit card number and amount owed. Capital One will then go ahead and send Bank of America a check for the amount owed, and your balance will clear at Bank of America and show up instead on your Capital One credit card. Most banks charge you a small fee to conduct the balance transfer. On average, the fee is 3%. Many banks will offer you 0% APR for all the way up to 20 months in order to entice you to want to balance transfer your balances. Check out helpmebuildcredit.com. We have a ton of more information on balance transfers. If you're on YouTube, please subscribe to our channel. Hi, and welcome to the Help Me Build Credit podcast. The purpose of a balance transfer is to transfer your balance from a credit card with a high APR to a credit card with a lower APR. This week, I will teach you a few strategies on how you can possibly get cash from a 0% APR balance transfer as well. Strategy number 1, direct deposit. Chase, Barclay, and other banks very often allow you to deposit funds from a balance transfer directly to your checking account. But this option is usually not available for new card holders. Citibank, and as per the card master Wells Fargo, will allow even new card members to get these 0% APR checks to be used for whatever you desire, interest-free. Strategy number 2, overpay and refund. This strategy is to overpay a credit card balance and later request a refund. For example, if you have a $100 balance on credit card number 1, then go ahead and ask credit card number 2, the credit card that has the 0% APR balance transfer offer, to go ahead and balance transfer $10,000 from credit card number 1, which really only has a $100 balance. Credit card number 1 will receive a payment from credit card number 2 for $10,000, leaving you with an extra credit of $9,900. Then you can call credit card number 1 and request them to refund you the $9,900 statement credit by sending you a check in the mail. In the last few years, this has become very tough, as banks started either to refuse these types of payments or may close your account after you request a refund. Usually only if this happens multiple times. In order for you to up your chances of being successful, I recommend you to choose for credit card number 1, a bank that you don't care so much if they would close you down, and make sure you have a small balance on the credit card, as that will help for the bank not to decline the balance transfer payment. If you're on YouTube, please subscribe to our channel. Hi, and welcome to the Help Me Build Credit podcast. This week we will discuss what you need to know about penalty APR. A penalty APR is the APR you will be paying if you make a late payment on a credit card, a payment is returned, etc. This may be higher than the standard APR, but where it makes a more significant difference is when it comes to promotional 0% APR balance transfer offers. Before taking advantage of any of these offers, keep in mind that if you end up being late, it happens to the best of us, or a check is returned, then the penalty APR may kick in, and you will be losing the 0% APR offer for up to 6 months. Not every credit card has a penalty APR, and with personal credit cards, the penalty APR will only kick in if your payments are 60 days past due. With business credit cards, the penalty APR might kick in much faster. So, before you take advantage of a balance transfer offer, make sure you familiarize yourself with the penalty APR. I hope you enjoyed today's episode. Please come back for more.